Management of Redington to talk a little bit more about their quarterly performance. We've got Mr. Ramesh Natarajan, the managing director, now joining in. Thank you for taking time out. Let's begin by talking about the revenue because that has been fairly encouraging. What have been the key growth drivers? And more importantly, do you think that in Q3 and Q4 this momentum can be sustained?
Thank you for having me with you. It's been a stellar performance for Redington this quarter. We have clocked the highest ever revenue at 24,896 crores, which is a 17% quarter on quarter and a 12% year on year. Our growth geographies like India, UAE, and the other markets have been incredibly growing very well. And our business groups that gets classified as cloud business group continues to grow at about 54%. Our mobility group that had a great advantage this quarter on account of new product launches that was done between Apple and the other brands had a 26% growth. Our core businesses of Endpoint Solutions Group had a 12% and our Technology Solutions Group had a growth prospect of about 12% plus. So all of it contributed towards this growth, and I consider Q3 and Q4 will also have its growth momentum, while the seasonalities will move from the consumer-oriented, mobility-oriented to large deals and technology solutions, and we expect the growth rates to largely continue in the remaining H2.
You know, Ramesh, despite the double-digit growth that one has seen in your revenues, your EBITDA and margins did take a hit. What are the challenges that you foresee, and do you see your margins actually improve in the second half of the fiscal?
Yes, the margin decline also happened because of the product mix, considering that this time the mobility has got a higher mix, which you get the advantage of high velocity and high capital rotations, thus giving you a better ROCE, but your gross margins obviously have a different composition when you're compared with Endpoint Solutions Group and the Technology Solutions. That was one of the reasons. Otherwise, some part of our growth markets did have some supply chasing the demand, and hence there has been certain stocks that get aging. To that extent, we have inventory provisions that is now more of a provision that should come back in the subsequent quarters. And some large deals which we did, which also contributed to the good growth, also had value margin, but not probably in absolute. So it is a combination of product mix, large deals, and a great advantage working capital efficiently on one side. If you also look at the operational efficiency of OPEX, considering that we have our costs completely under control, our working capital has got an advantage of a good 10 days from our rational 35, 40 days that we generally used to have in a quarter, gave us the advantage of growth. And we would tend to have the working capital come back to normalcy by the next 2 quarters, but the gross margin will tend to sustain and grow and will not be always as we probably see it this quarter. And a lot of these margins that are now on provisions will obviously come back as we sell these stocks moving into Q3. That should probably set the gross margins up and proper.
So would you have a margin target in mind? What is it that you're hoping to close the financial with?
If you would look at our last many quarters, our CAGR growth, either on revenue or on EBIT or on PAT, has always been between 14, 15, and 16%. So we would obviously continue to sustain our gross margins at the levels that we have been seeing at an average in the last about 6, 7, 8 quarters. Now, COVID and pre-COVID had a certain advantage, but now that the markets have come back to normalization, we expect it to definitely be around the 4% plus, 4 and 4% plus.
Right. You talked about headwinds across Turkey and Saudi Arabia. Give us some outline on that. Where is it that you see business headed, or do you see some more pressure in the coming quarters as well?
See, the KSA market seemed to have just got some staging of government reprioritizing themselves on IT. So to that extent, you see a probable dip now. But we do see these markets coming back with their prioritizations as we move forward. We also had some telecom operators tend to be aggressive, and that probably contributed a little bit of mobility challenges, but we also see that coming back in some time. The endpoint solutions had some supply is chasing demand, and to that extent, as I said, stock provisions happening. But we expect in the next 2 quarters, certain part of the advantages will come back. And KSA is a stable market, large market, and we definitely feel that coming back to growth trajectory is just a matter of another 1 or 2 quarters in KSA as we see through.
All right, gonna have to let you go on that note. Thank you so much for joining in and giving us an overall view as to how business is shaping up. That's the management of Redington saying that there has been strong growth in India as well as for the UAE business, and they will maintain a gross margin at 4% plus levels.